Good day, divergence traders. Good day. It's 11:15. Did you see divergence today and trade it in advance? Did it tell you right over here, oh, here's the retracement, here's the high, here's the retracement, right? Did it not tell you, oh, divergence is coming soon, probably to sell, counter trend divergence? That's what I was telling you here. But right over here, when we started moving up and the 5 crossed above the 7, it told you right down here that divergence may be coming very, very soon to a computer screen near you. Yeah, just like the movies. When the movies comes to you, coming soon, right? Right. So, as we rallied up, we're thinking, we're going to put in a top and then we're going to do a retracement. Yeah, we put in a top. We did the retracement. We came back up and created a double top. Okay, and then came back and went do. So, here's our divergence. High and higher high. And lower high on the indicator. And we can't forget my most wonderful yellow doodahs, right? So say somewhere, this is the opening candle right here, this big candle down. So let's say it opened up, we're a little fearful that it's going up, and no, it's coming down. So this is what I would do and wait for confirmation. I would have got in just below 13,900 right here. I didn't trade this today. I'm just saying, yeah, I don't like to trade the open, to be honest with you, because you don't know what it's going to do. It could have went up the same amount as it went down. So anyway, say we got in right here, just underneath 13,900. Our stop would be around 45 pips right there. Did we get 45 pips? Oh yeah, we got it within the first 5 minutes. We got her. Yeah, and it went down another 30 or so pips. So once we came down here, we retraced back up, and there was a scalp trade to sell right there on the opening of this candle, and it was a successful trade. However, once again, if you sold again to do a scalper trade, it went up and scared the living bejesus out of you. But the 5 didn't cross back up over the 7, and they smacked it back down. This is where I would have sold, right here. Because this candle would have proved, hey, there's a good chance we could go back to R1 again, right? So if I waited for this candle to close and got in this one, scalp trades I'm talking about, ladies and gentlemen. Okay, it went down 21 points. Okay, you would have got your little scalper there. Okay, and then we hit the bottom again. So what does that look like? First, you look on the chart for lower lows or a double bottom. In this particular situation, it's a double bottom. Then you look on the OSMA or whatever you decide to use to find your divergence. And if it's divergent, then hey, you got a setup. Double bottom, okay? Double bottom right there. And this going up like this, right there. That's it. That's it, man. That's the divergence. So say we waited right here on the opening of this candle and we got in right there. Our stop would be 45 pips. Did we get 90? We did. We got our 2-to-1 win-loss ratio. Yeah, man. Gotta love it. Beautiful divergence trades today on the NASDAQ. Woo-wee. Let's get a little aqua. Okay, let's go now to the Dow. Oh my God. Suicide. Suicide on the dial. You might as well just commit suicide. Oh my God, look at that crap. Holy sheep shit. Anyway, this is the opening candle, right? Yeah, this is this big candle down. Is the 9:30 stock market open candle. And look at that crap. Let's not get too far ahead of ourselves, okay? Okay, we basically have a triple top. See that? No, it's not perfect. No, it's not. But it's divergence. It's a triple top. And then you just take this like this. Actually, it should be coming from there to there or something like that. And we'll put on our doodah right there. Cross down, close below the 5 and the 7. You would have sold it right here. Stop. I would have put it just right above 32,800 right there, 46 pips. And we got our 46 pips. It went down 67 pips. And then, okay, we had a low and a lower low. We did. And right there, like that. All right. And we had a buy right here. I'm going to put my stop under S2. 45 pips again. There's 57 pips. There's 110 pips. You would have got your 2 to 1. Now, up here, there's not divergence like there was on the NASDAQ. No. There's no divergence there to sell. Can you believe that? And then you've seen what happened after that. This like spike right back up here from down here. Oh yeah, look at this big candle spike down. Here we go. Yeah. I wouldn't touch that with a 10-foot pole after that. And then it just got worse and worse and worse and chopped the living daylights out of you. All right, let's look at the S&P 500. Is it bad or is it good? No, it's good. It's good. You got divergence all over the place. All over town, man. We got a high and a higher high. And we got a lower high on our indicator. Yes, we do. And we got a trade right there. Sell right there. Stop was very small, 3-4 points. And it went down 7. So there's your 2 to 1 win-loss ratio. And right here we got a low and a lower low. Right? And that on the indicator. And our little doodah right there. Our stop, I would have put it underneath the main pivot of the day. That's the blue line. 8-point stop. Went up 9 points right there. Went up 16. We're shy 2 points to get the 2 to 1 win-loss ratio. Okay, that was good. That was good. And then we had another trade right here. Yes, you can strike through other candles when drawing divergence. It's not against the divergence law. There's no divergence policeman gonna come after you. Okay, right there. And you would have got in right there. Look at that, eh? Before the open. Ooh, before the open, that's scary. 7-point stop, and it went down 20. It's almost 3 to 1 win-loss ratio. And look at what do we have down here? What do we have? What do we have? We have a low, retracement, and a lower low. Can't be. Yes, it can. And we would have got in somewhere in here. You would have jumped in. Stop would have been 10 points. And it went up 13 points. You would have got your 1 to 1 win-loss ratio, eh? Look at all those beautiful arrows, eh? Sell, buy, eh? How could that possibly be? It's like every time it changes direction, there's divergence there, and it gives me the 1-to-1 win-loss ratio. How can that be? It's the power of divergence, ladies and gentlemen. It is the best, in my opinion, the best strategy ever. And I know, because I've been trading it for over a decade, man. I ain't telling you any beeswax here. Okay, let's move on now to oil. What did oil do? Oh, it's doing a roller coaster ride. That's what it's doing. Here we go. We're going up the roller coaster, up the roller coaster, up. Oh, down the roller coaster. Woo! Then up again the roller coaster, up. Oh, can't make it up there. And down the roller coaster. Up and down the roller coaster. And guess what? There's only... Oh no, there's divergence all over the damn place too. Look at this. Look at this crazy bottom here for hours. Look at this. Look at this shit. For 2 hours it did this. Wow. And we can draw it from here. Right up to here. And you would have got in right there. Right at S2 and $73 a barrel right here. Yeah, I noticed last night driving, gasoline was $1.37 a liter here. I don't know, just like a week ago. Now it's $1.64 and climbing. It's probably going to go over $2 again. They'll say, oh, they'll say it's summertime driving. There's more people driving. Yeah, whatever. They're just collecting more money from us, the bastards. Okay, stop was there. 31 ticks. 32 ticks. Oh, we got our 31 ticks. 1-to-1 win-loss ratio. What do you know? And there's no trade to sell it here before the open. Is this the open? Oh, yeah, that's the open of the oil market. The oil market opens at 9 o'clock. That's right here, this. Excuse me. Yeah, the open for oil was right here. Anyway, there was no divergence to sell it up here. For this big move down. 123 ticks. Points, pips, whatever you want to call it. And there's no divergence. Oh no, there is divergence. What am I saying? Low and lower lows. And wait a minute, that comes from sorry, I drew that too far. Right there. Yeah, right there to right there. So right there to right there. Good enough. It was divergent if you really looked for it. You had time if you were sitting here watching this when it happened. That's the great thing with divergence. We knew from way up here that we're looking for a low and a lower lows, or double bottom. That's what we were looking for. Or a pullback in the trend to go lower. Yeah. And hold on. 39, we'll say 40 points. Did it go up 40 points? Oh, it did, just by the skinnier teeth. And was there divergence up here? Oh yeah. Oh yeah, there was. There definitely was. Right there. And right there, I think it was. No, it's down here. It's right here. Okay, hurry up, Jason. You're going a little slow. Okay, so you would have sold it there. Stop would have been there. 32 points. It went down 39, so you would have got your 1-to-1. You would have got your 1-to-1 on all three of these trades, ladies and gentlemen. So if you did each trade, each one was like 31 points or ticks. That's 90 points. Yes, indeed. Let's look at the pound yen. Oh. Pound yen not look very good. No. No divergence to sell here. Definitely divergence here. This is in the UK session. You can see it right here. It's like a triple bottom. Is it perfect? No. No, it's not. And right here like this. And up we go. Going to show them anyway. We're right there. Stop would have been 21 and it went up 54 pips. Then we had another similar, we had higher high up here. See, high and higher highs. And right there like that. And you would have got short right in there. Boom. 18 pips stop. And it went down 17. Missed our 1-to-1 win-loss ratio by 1 pip. Yes, 1 pip. And here was another trade right here in between 7 o'clock and 8 o'clock. It's right here. It's hard to see divergence. It is. This one goes right here. Okay, would have sold it here. Our stop would be here, 15 pips. Went down 38 pips to the pivot. Was there divergence here with a low and a lower low? No, because this valley is lower than this one. It needs to be more shallow. So there's no divergence to buy here. But there is divergence to sell again. We got hard to see hidden divergence again. Look at that. Okay. Sell right here, stop right here, 18 pips. Went down 33. 18 and 18 is 36. Went down 33. Missed our 2-to-1 win-loss ratio. Is there divergence here? A low and a lower low. Oh, you betcha, Skippy. There is. See that? The arrow to go long right there. So we would have got long there. Stop would have been 20 pips. Went up 29 pips. You definitely got your 1-to-1 win-loss ratio. So there's 1, 2, 3, 4, 5 winning trades on the pound yen. What about the euro yen? Let's check out the euro yen. Yes. Let me show you some failed trades on the euro yen. There's no trade right here to sell it. No. This needed to be higher mountain peak than this one. And that would have been hidden divergence, and down it goes. And what about here? There's divergence here. Let me show you. This is on the opening of the UK session. Right there. It's right there like that. And here. So we have a 13 pip stop. And it went up 29 pips. There's your 2-to-1 win-loss ratio. I'm sure you can see the divergence right here, right? High, retracement, higher high. You see that? Always look for it on the chart first Then look at the indicator below that you're using. That's the way this is done. Okay, ladies and gentlemen. Right there, I guess it is. And this is a losing trade. 100% losing trade. You cannot win on every trade in trading. Some people have went, 10 in a row, some 30 in a row. There's some who've even done 100 trades in a row, and they all won. Crazy, right? But sooner or later, and usually sooner, they hit a loss. Okay? Every trade I showed you today was a winner. Except now we're hitting the loss. It's right here. Okay, so we would have sold right there. Stop was 14 pips. It only went down 5. Okay, your stop would have been there if you would have held on through this. They would have come and got your stop right here. That's what they do. Okay, now let's check this out. We got a high and a higher high. Right there like that. See that? You would have got in on the opening of this candle. Your stop would have been 18 pips. Went down 28 pips. So you definitely got your 1-to-1 win-loss ratio. Now, down here, is there any divergence? No. To buy it here? No. And what about up here? Is there any divergence? No, because these wicks are higher than this one. If there was no wicks on here and it was right here, or say right here, we would have had hidden divergence to sell right in here. But we don't have that. Okay? And then right here, there's no divergence again. Well, unless you were going to count it this way. But anyway. There was a trade here. The 5 crossing up over the 7. You would have got long right here, and up it goes. 38 points. It's unreal how many times they've been bouncing off this $1.50 here. Been doing it for a week. They've done it about 10 times now. They just can't get through there. And you look at the daily, look. It looks like it's going to go up here and go up to here. 151, 152, somewhere around there. They keep butting their head up against this $1.50 right here. Anyway, it's always wise to look at higher time frames to see, what's going on, because sometimes you'll have a divergence set up on a 5-minute chart. You go look at the daily and it'll tell you a story that, oh, maybe I shouldn't do this sell trade here. You don't know. So that's why you got to analyze higher time frames to know what's going on. Okay, let's look at gold now. Ah, yeah, gold's crap. Let's see, hold on. Ah, it's going down, not up. There's no divergence, man. And they slammed her down at 8:30, so there must have been news today at 8:30 for the gold. And then it went back up and down and up and down. Roller coaster. I don't see no divergence here. No, don't see none. Look at the pound dollar now. Oh, look at the pound. It's crappy. There's divergence over here. High and higher high. So if you would have got short here, stop was 12 points, pips. Went down 18 pips. Whip-de-doo. Whip-de-doo. And here to here, no. But we can draw it over here. Even right up to there. And we take it from here down to here. And we get our little doodah. And put it here. Somewhere you would have had to jump in as it was crashing down. If you waited for it to close and you sold here, it didn't go very far. So let's just say right below this wick right here. See that wick stir? So we'll say somewhere you jumped in the middle. You got enough courage and strength up to beat the fear and jump in. So you jumped in, 15 pip stop, and it went down 26 pips. And there you have it. And if this was higher than this, we could do it again. Look at that, another spike down. Oh, one spike down. See how they do that right from near the top? They just slam it down to catch everybody off guard. Same thing, they did it here again, right here. Slammed it down. Look at that shit. Yeah. And they did it again right here, just not as bad. So if we go like this is the last setup of today. So if you got in on the opening of this candle, your stop would be up here, 13 pips. Went down 9, came back up against you, went down 21. You would have got your 1-to-1 win-loss ratio. So anyway, once again, my name's Jason Sweezy. I trade divergence. I have a very big passion for trading divergence. And I will always say every day, I believe it's the best strategy out there. But anyway, there's more than one way to skin a cat, they say. So people like to trade other ways. You know, people like to trade, what do they call that? The value gap and the VWAP, and yeah, to each their own, right? I myself never used the VWAP or the value gap. I think that looking at the value gap and drawing zones on your chart, to me, it's just a new way of saying support and resistance. I don't know. That's the way I look at it. So I was taught, you know, support and resistance. That's what I was taught. There's new names for it now. Just like we used to call the big traders, the big institutions and the banks, we would call them big dogs. Woo, woo, right? And now they call them whales. Okay. Whatever. Anyway, too funny. It's really funny. I got a good friend of mine that I've known for over 30 years. I got him into crypto, and within 2 months he was talking the lingo, right? All the new ways, you know, HODL and the whales and stuff like that. And I go, and he said it to me. I go, what did you say? He goes, the whales. I go, what do you mean the whales? He goes, you know, the big institutions. I started laughing. I go, oh, the big dogs. He goes, yeah, the whales. And, you know, he's the same age as me, but he never traded till like 2018 or something. And he's already talking the new talk because that's what he sees in the charts, in the videos, in the blogs, and so on. Anyway, thank you for listening. Thank you for watching. Good luck and good trading.